Okay, well, good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this marvelous Wednesday, January 25th, 2023. Mickey Blindside here with your market memo. So, we're seeing a little bit of volatility come back into the markets. Let's take a look, shall we? All right. So, it looks like we're seeing a pullback in the S&P 500. The VIX is up 7%, up $1.36, and then the VIX 9-day is up $2, up 9.34%. The spread between the 9-day VIX and the 30 standard 30-day VIX is still increasing. When we see the shorter dated VIX spike above the longer dated VIX, that shows me that there's a lot of uncertainty in the short term. We had earnings come out for Microsoft. A lot of people said that Microsoft's earnings wasn't bad and they still sold off. I beg to differ. Actually, I actually thought it was really bad. Microsoft's earnings was not good at all. I don't care what the media says. I actually did a little bit of digging and looked through the SEC filings and their sales. I mean, they had sales growth in the past few years of 20-30% per year. We're not seeing that anymore. Okay, we're seeing maybe 2 to 5% growth in sales. Right now, their earnings per share is being propped up by all the cost cutting that they're doing. It's not really coming from growth, okay? And so all this cost cutting means that it could hurt their future growth. All right. I know what you're gonna say. Oh, but what about that partnership with ChatGPT? There's a lot of risk in that. I think Microsoft, they just put in about $10 billion into that. We'll see what comes out of that, but that $10 billion, it better make a good return for them. And right now they're paying a premium for future growth. But overall, their spending is getting cut too. So, this makes way for a competitor to come in. And so, what I thought, Microsoft, I considered it a good candidate for a forever stock. No more. I do not think of Microsoft as a forever stock anymore. I actually think fair value in this stock comes around 160 or so, 150 to 160. Which is more around 17 times earnings, just because Microsoft was considered, this valuation that Microsoft has, which right now is about 25, 26 times earnings, is growth. It's a dividend growth stock. Okay, that's what it's priced for. I don't think that's a good way of pricing Microsoft going forward. I think it needs to be more priced as a value stock, and if that's the case, this needs to come down. Okay, and I think right now fair value is more around 160 with the sales growth that they have. It's not they no longer have that growth. It's almost like all that growth has been squeezed out. And that's kind of normal for this type of economic cycle. When we look at economic cycles and we look at peak credit and we look at, some bad bear markets and credit tightening, generally what we see is that we see the future innovators come from that time period. Okay, so so I think the next Microsoft, the next Apple, the next Amazon probably is going to be in the Russell sometime after June. Okay, and generally it's if you look back in history, we tend to see some of the future mega cap companies come from periods right after or during credit tightening. Same thing, actually, if you look back at Microsoft, Apple, all these companies, some of those older tech companies. Well, I say older, but they're still relatively young, I would say. But Microsoft, Apple, all those came during, the 80s or so, after the peak credit of the 70s. Okay, and so right now we're kind of in the similar cycle. We're at peak credit. Now we're going through credit tightening. Again, wouldn't be surprised if the next Microsoft, the next Apple, the next Amazon gets put into the Russell sometime after this June rebalance. All right. And so, this is kind of the natural order of things. Some of these high growth companies become, more value based, and then the next, growth companies are right now, innovating. And so once Microsoft, has to cut costs to the point where their future growth gets hampered, that's when you start seeing competitors overtake. So Microsoft is no longer in my forever list. And again, I do think that, even if I say that, the fair value is at 150, 160, it could be that even if the market rallies, that we could see Microsoft still rally. But I do think that over the course of the next year or two, we do see that 150, and that's probably where the institutional demand will come through. That level is a rising level. So if sales do go up, or earnings do go up, of course, that fair value level will go up. But right now, currently, just based on their current earnings, it's around that 150 to 160 mark, which is around 17 times earnings. So that's what I see as fair value. And if we see the same type of sales growth slow down in Apple and in Google and some of these other mega cap tech stocks, watch out. That's not going to be good for the market. So we shall see. I have no idea. I'm not predicting what the ERs are going to look like, but we shall see next week. I think next week will tell. But anyway, the whole point of all of that is we're saying that shorter dated VIX 9-day hedging happening on the VIX 9-day. So, there is some of this. The market is getting ready or hedging for some type of short-term unknown. And I do think that could be the earnings. I think that also could be the FOMC coming up next week. Remember, guys, next week, 1 week from today, we've got those FOMC rate hikes. Everybody already knows it's going to be a 25 basis point rate hike, but it's just either this one or in the March meeting. I think there's going to be a little bit more clarity, or at least the bond market is going to react to either the expectation that we're going to see, higher for longer interest rates, or they're going to keep pricing in what they're pricing in right now, which is a rate cut. But I do think the odds favor that at some time in March or April or so, that yield curve inversion trade may blow up in people's faces, and it may be that March FOMC that's the impetus for that. If Papa Powell comes out and says, hey, the economy's doing well and there's really no need for us to cut rates, then and the bond market believes it, and if the bond market thinks, okay, then maybe our expectation of that rate cut at the end of the year is not going to happen, and recession fears are way overblown, then yeah, we could see a violent run towards the exits from that yield inversion trade, which actually is going to probably make the TNX, the 10-year Treasury rate, spike, because the yield inversion trade right now is to go long the longer dated maturities like the 10 years and 20 years, and to short the shorter dated maturities. And as that unwinds, that's going to send the TNX up, the 10-year Treasury up, and that's what most institutions use, the interest rate that they use, the risk-free rate that they use to value assets. And so if we start seeing that go up, we could see valuations getting compressed really quickly within the stock market. That might be our first major pullback this year, is around April or so. So, so even if we don't get a pullback, I told you guys that I'm trying to get into indices trade. I'm trying to get into IWM or QQQ. I'm leaning toward the IWM right now at certain levels. I want IWM. I mean, the major IWM buy is going to be around that 171 level, 171.5 level. However, I'm also willing to take an initial long when the RTY gets to about 1811 or so, which is about, it's about, I would say about 3-4% lower. So if we get that, I mean, yeah, I'd love to get into the IWM trade. But again, if we miss it in this round, that's okay, because I think in April we're going to see, we might see a little bit of volatility and a major pullback around April. And that may be our point of entry. We might be able to, get a good entry then. So I'm not in any rush to do anything. I still am in mostly cash. And, my biggest position, you guys already know what my biggest position is. It's Quad U, uranium. This is going to be my main play for the next couple of years is uranium. And you guys know how I feel about that. You can always go back into our previous episodes and of Market Memo and take a look at my uranium thesis. We've been talking about uranium since June, and we got into these positions around, I believe, sometime around here or so, around October, November or so. And so we're up ahead right now. My cost basis after selling all those covered calls and buying protective puts, I think we did like 2 or 3 rounds of that. Right now, my cost basis is in the 590 area. So we got a pretty good profit right now. Hopefully, this will make an uptrend, a higher high, higher low uptrend. And if we get into the 8.5s, maybe even higher, that's where I want to sell some covered calls again. But we shall see. Okay, so this is my biggest position so far. I do still have a lot of cash, and I do want to get into the indices trades, but again, we'll see. Okay, we'll see. I'm not in any hurry to do that. If I'm going to get into a trade, I want to make sure that we get in at the best value. Speaking of which, speaking of earnings, I'm looking for another earnings later today. CSX, which is a railroad company. I like this level right here, and I have a level right here, and actually triggered today, right before the Market Memo started airing today. I'm right at that level. Unfortunately, though, it's earnings today. It's the earnings release later today after the market close. So as a rule, I don't like to enter a position in an individual stock if it's got an earnings in the next couple of days, let alone the same day. So I do not want to participate in that IV pump and then that IV crush, the day after. So I'm going to be patient on this, and hopefully, I really do hope that tomorrow initially it gaps down, crushes all that IV, and maybe then I'll buy some in the money leaps. CSX has a pretty decent options chain. I'm looking at the January 2025 30 or 25 strike. 25 strike is not bad. I mean, it's not bad. It's if I can get lower though, I mean, if I can get into more closer to the low 8s or 7s, that would be awesome. That would be awesome. And if that happens tomorrow after the earnings release for CSX, and if CSX's earnings isn't that bad, and if they're still, if their earnings are good, I will definitely get into this. I think it's a good name to be in. One of the reasons why, we've talked about this for a bit is the transports to utilities ratio. We've looked at this. I touched upon this like very briefly at the end of the year or beginning of the year this year, or end of 2022. It was one of those. But I touched on this very briefly. It's been in a downtrend ever since 2022 started, and it looks like now it wants to start an uptrend. And so, we're seeing some relative strength in transports, and I think with all this recession fears being overblown, I think that if that recession trade and that yield inversion trade reverses, we could see some of these like cyclicals actually catch a little bit of a bid. And so I definitely want to get involved in this. It's just I don't want to get involved in it now with the IV being high right before a binary event like a earnings. And so hopefully tomorrow it gaps down, and if it gaps down with an IV crush and these 25s are closer to like low 8s or 7s, oh my goodness, that would be the buy. If it doesn't go down as much, but IV crushes, I might get even into the 30 strikes. If these get into, I don't know, into the low 5s or high 4s, it just depends. It depends on the IV that I get and the implied volatility of this chain. So we shall see, and I'll let you guys know. And again, this is going to be one of my poor man's covered call targets. And so that is what I'm looking at right now as a railroad company. But again, we shall see. Right now, it is at the edge of its price structure in its little box ever since October or so. It's at the edge of that box. And so again, if it just overshoots it just a little bit for this week, I think that would be a great buy. And if it ends lower by the end of the week, which is only 2 days away, I stop out for a very small loss and I move on from there. Okay, so the reward to risk is actually pretty good on this, as long as we can get a very good value after today's end of day earnings release and to tomorrow's open. Okay, so hopefully we get an opportunity there. All right. Next, one of our members brought this to my attention. Wonderbug, I'm talking about you. I think your name is Willie. Willie, you're my boy. There you go. You know, you came up with a pretty good thesis and an idea, and that is KB Homes. So thank you for bringing that to my attention. I really like this play that he mentioned. He wants to short some of the home builders, and here's why. So on January 11th, they had earnings coming out, or they had earnings that came out. And let's just put it this way. So their growth is slowing down. They're having some problems with their home sales, just because of the, they're blaming the higher mortgage rates, the recession, the inflation, all of these issues. And so there was a huge drop in orders for new homes, which, I mean, I guess that is reasonable to expect with the mortgage rates going this high. But it's their backlog decreased by 25%. All right, and not only that, their gross orders for the quarter were down about 47%. All right, about half. And then also to the cancellation rate of those gross orders was around like 70%. It was like 60 something percent, 68, 69% or something like that, if I recall correctly, compared to like something like 10, 15% from the year before. So we're definitely seeing, the consumer slowing down in home purchases, which again was expected, but with the cancellation rates and everything, I think this continues. Now, having said that, mortgage rates have dropped in recent weeks. All right, they have dropped. So I do think that we might see maybe another quarter or two of quote unquote better than expected earnings. Because right now everybody thinks that, oh my God, housing's gonna crash. I mean, that seems to be like every furu on Twitter keeps saying that, which I don't think it's gonna happen in this year. I don't think it's gonna happen in the first half of this year. If it happens this year, it's probably gonna be toward the end of 2023. I think it's more gonna happen toward 2024. You guys know about my thesis. I've been saying this for like, I don't know how many months, but I think this is a good candidate to short. And one of the things I wanted to show you was the chart with the, let's take a look. I had it here, but it looks like TradingView got rid of it. But I just want to show from the top to the bottom. All right. So right now, I think right here, if you look at the value-weighted transaction zones, right now I think as this first came down in the second half of 2021, a lot of buyers stepped in right here, okay? A lot of buyers stepped into the stock, all right, bought it up, but then it closed under that. So I think right here, you see a lot of bag holders. There's probably a lot of bag holders right here at this level. What is that level? Around 4160 or so. Okay, 4160. Now, having said that, I think a good level to initially short this, okay, would be around that 4220 zone. Okay, the 4220 zone. If you look at the weekly chart, those are, that's a key level. Going back all the way to around 2004, in the mid 2000s. Okay, so this is a same zone as there. It's a zone that's been of interest, I guess, for over a decade now. Now, if KBH gets to 4220 and our liquidity indicators and our market internal data, like our junk bonds ADL line, which I'm sorry, guys, I didn't update this last night. I will update it. Yesterday, it was advances over declines by about 150, 160. Okay, so it was advances over declines. At the end of day today, I'll update for yesterday's numbers and for today's numbers. Okay, so I just forgot to do this. Day by day, it's not that important. It's the trends, kind of like the multi-day or multi-week trends you want to be looking at for the junk bonds ADL. But anyway, if this is curving down, if our junk bonds ADL is advanced decline line is curving down and showing weakness, as well as our New York high-low line showing weakness, and KBH gets to that 4220, I will initiate a short right there, okay, at 4220. However, if we get to 4220 on KBH, but at the same time our liquidity data, our junk bonds advanced decline line, New York Stock Exchange high-low line, if those are still curving up and showing strength, I will wait. Then I will wait. I will wait to closer to 50, okay, closer to 50, 49.50 zone, all right? So that's my plan so far. How am I going to short this? I'm going to be using puts, all right? Which puts I'm going to use? I'm going to be using leaps, all right? I'm actually going to go with low delta leaps. I might go for something like delta 12 or so, between 10 and 12. That's kind of the sweet spot. For like a longer term, like kind of a speculative play. This is a speculative play, so I'm not going to go all in on this short, but I think it is a short worth doing, and I will go with a low delta leap. I'm looking at the January 2025 options chain so far. I have no idea how long it's going to take for this to get up there. Now, if it takes a couple of quarters, I imagine then the June 2025 option chain may be open at that time. And so I'll take a look at what's the, what's out there then. But if it happens sooner, then, I'll be taking one. This is another play, and again, Wonderbug, thank you so much for bringing this to my attention. I really like this play. I really like this, and it goes with our thesis for 2024. I do think that this is going to go higher as some of these inflation fears about the recession fears for the next 6 months or so runs rampant. I think we're going to see a little bit of a mini bull market, and when we see that mini bull market, I think it's going to be very low participation, and we're going to see a lot of these stocks move up. And when it gets to those high value zones, later on this year, and as we get closer and closer, and hopefully we see, well, not hopefully, but if we want our thesis to play out, we're going to want to see commodity prices go up and inflation start picking up at the end of the year. If that's the case, boom, and we get here and liquidity data starts turning, boom, we start shorting KBH. I like it. I love that play. Okay, I like this. This is definitely on my radar. This is part of my plans now, and I'm definitely going to be following this company more closely as far as earnings are concerned, as well too. All right. Next, we usually do crypto as well. Again, what is it? I'm not seeing any type of big OI changes, but I mean, then again, I checked a couple of hours ago. You know what? Let's just check it together. We might as well, right? We got some time right now. Let's take a look. So this is for ETH, 4.8. So it is coming down. I think it was 4.9 yesterday, right? 6.1. So okay, so it was like 6.2, 6.4 yesterday, right? If I recall correctly. So it's coming down. I mean, day by day, it's going to do this. It's going to fluctuate, right? It's like, it can't go up every day. That's the open interest. It can't go up every day. But okay, that's good. That's good. So we'll see what happens. Let's see if there's any block trades and any of these options. I don't think. Hold on. I don't think the OI is high enough yet for us to gauge what type. So it looks like we're starting to see some larger trades happening. Buy, sell. What is this? February buying a put, selling a put. So selling a shorter dated put to pay for a longer dated put. Calendar put spread right here. This looks like, is it part of the same transaction? This is, no, it's not. Let's see, 56.18, 21.810. I don't see anyone. No, I don't see anything else. I don't see any matching pairs. Unfortunately, if you're a US user, they don't format this data in a nice way for you. This is the only way of doing this if you're in the US. What? No. Okay. So, I mean, it's starting to come back. We're starting to see some bigger trades coming back, at least in ETH. Let's actually take a look at Bitcoin with the higher open interest. Oh, look at that. The skew is back to backward skew again. Remember how it was forward skew? So maybe some of those gamblers got wiped out or left. Per usual. Of course, that's typical. Let's see. Oh, look at that. Some of bigger transactions are happening now. Look at that. Bigger transactions. What is this? 52.52. So this one was one trade. That was a sell. Selling a strangle? A straddle. Somebody stole the straddle. So they're selling volatility here. Unless there's another leg, which I don't see. I don't see any other 52s or anything like that. I mean, they could have done it in pieces too, but as one trade, it looks like this was one trade right here, and it was a straddle sale. 3108 right here, 3108, 3108. What is that? A sell, 10 sell, 23 sell. Another straddle. Another straddle. So there are some bigger trades thinking that the price will not move too much and that volatility will come down. It's down in Bitcoin. Okay, well, we shall see. Oh, what is this for? February 10th and February 24th. February 10th and February 24th. Okay, so about a month. So 2 weeks to a month of low volatility. That makes, okay, that's interesting. That's very interesting. But we are starting to see those bigger block trades coming through. Oh, so we might, maybe if this continues, maybe in a couple of weeks, we might be able to analyze the options market on Bitcoin and Ethereum and gain some better insights into what's going on, and look for those supply and demand zones using the options chain. Not yet, though. I don't think it's there yet, but we're starting to see those signs, though. The sizes of these transactions are getting higher. So we'll cover this a little bit more in depth as these numbers keep going up. Okay? Cool. This is really neat. All right. Anything else you guys want to look at? Anything you guys want to go over? Charts, anything? Going once, going twice. All right then, sold. In that case, that wraps up our session of the morning market memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back tomorrow, Thursday, 30 minutes after the opening bell of New York Stock Exchange, 10 a.m. Eastern time. Hope to see you guys then. Trade safe.